Welcome to Bulls and Bears, where we explore ASX-listed public companies that are doing interesting things. I'm Matt Birney, and I'm delighted today to be joined in the Bulls and Bears Perth studio by the Managing Director of Red Mountain Mining, John Dugdale. Good morning, John.
Good morning, Matt.
Red Mountain Mining's flagship exploration play is the Batangas Gold Project in the Philippines, about 2 hours south of Manila and only about 20 minutes from the major industrial port city of Batangas. Last week, the company released the results from their long-awaited pre-feasibility study, or PFS, into the Batangas Gold Project, and today we're going to delve into the key metrics of that project. John, can you tell us in simple terms, how much will you outlay to build the Batangas project and how much will it return?
So for around a 22 million upfront capital outlay to build the project, we'll be producing around 10 million of free cash every year for the first 7 years. But importantly, Matt, the initial production is very high grade. It's 6.6 grams per tonne for the initial Southwest Breccia open pit. So that really front ends the cash flow of the project. Now, Southwest Breccia, even more exciting than that initial average grade, has also produced grades such as 7 metres at 20 grams per tonne and 6 metres at 31 grams per tonne right from surface. So the initial production grade will be exceptional.
So that's 6 metres at an ounce to the tonne.
That's correct.
Not bad results at all. I'm guessing in the Philippines your cost to produce an ounce of gold is pretty good. But what does your PFS say about your C1 cost to produce an ounce?
Well, the average cost over that initial 7-year period is US $735 an ounce, which is around $999 Aussie an ounce for that, just that initial 7-year period. But at the current margins, at the current gold price of around 1750 Aussie an ounce, that produces a very healthy margin.
So there's a PFS on the street now from Red Mountain Mining. What are the key reserve numbers included in that PFS? So, in other words, what's your mining inventory now?
Well, our ore reserve,
yep.
it's now a maiden ore reserve, is around 1.44 million tonnes at 2.8 grams per tonne. That includes a very high grade for open pit production reserve within that of about 100,000 ounces at over 4 or 4.2 grams per tonne, including silver credits. Now, that'll produce around 116,000 ounces of recovered gold over that initial 7 years. But the really good thing about this ore body and this reserve is the very high grades right at surface. The high grades are outcropping, and so that'll really give this project a great head start.
So you said there's an initial 7-year mine life at Batangas. How much free cash do you expect this thing to spit out over that 7-year period?
So over the 7 years, it produces around 74 million of operating cash flow over that initial mine life. And after taking into account that initial upfront capital to build the project and the sustaining capital to keep the project going, it produces around 46 million of free cash, or around 50 million at the current gold price.
And so you did say in the PFS you've modelled up 7 years. Do you see much scope beyond that 7 years, or will that pretty much see the project out?
This really is just the start of what's going to be a very exciting project. We've got 320,000 ounces of additional gold sitting mostly in inferred status that we can convert to indicated resources and reserves over the mine life. But even more exciting than that, we've got another 14 kilometres of identified high-grade epithermal gold structures at our Lobo prospect in the Batangas project, and we've only tested about 1 kilometre of that. Now, immediately close to the initial Southwest Breccia reserve, we've got those high-grade results I mentioned earlier, and also some other results like 3.5 metres at 26 grams per tonne and 2.5 at 28.6 grams per tonne, which we're looking to test very soon. But beyond that, within that greater 14 kilometres, we've got results such as 7 metres at 23 grams per tonne and 75 grams per tonne at surface in rock chips. And that's just from the exposed part of those structures. We anticipate that the majority of those 14 kilometres, the high-grade gold zone is just going to be sitting just below the surface, which is a characteristic of this type of ore body.
So in other words, the 7 years modelled up in the PFS is very much an initial 7 years. You're fully expecting to extend that at some point in time.
Yes, we want to get into cash flow and then test these exciting targets and continue to build the high-grade reserves.
John Dugdale from Red Mountain Mining, thanks very much for your time today in the Bulls and Bears studio. If you'd like to learn more about Red Mountain Mining, their stock code is RMX. The company's share price has been trading at between 0.1 and 0.2 of a cent in recent months, making it an interesting trading stock for avid market participants. I'm Matt Birney, and you've been watching Bulls and Bears. For more Bulls and Bears stories, go to thewest.com.au and click the Business tab, followed by the Public Companies tab.